Okay. Good morning. Let's make sure. Yep, we are live. So um, let's head over here. Awesome. Okay. So good morning, everybody. I am putting, you guys are on Facebook. We are live, I'm assuming. So go ahead and reach out to me. Let me know that you guys can hear, that you can see, that I'm live. So go ahead and reach out to me. Let me know that you guys I've got you right here too. That you can see. I'm going to turn the volume down on my phone so that I can see the comments. So cool. So here is the market update. So let me, I'm going to pull up my spreadsheet here. So there's some interesting things happening going. We're halfway through October. We're going to be hitting November. It's an election season. Things are happening in the housing market, and I see a little tiny shift going on. And I'll tell you why I think that. So what basically I look at going into October is I look at how many homes buyers are putting under contract. So that kind of tells me what the demand is doing. And so in the past few months, right, we've been in close to 10,000. So September we had like 9,600, so 9,600 homes go under contract. You know, in August it was 9,900, July 97. June was our biggest month. We had almost 11,000 homes go under contract. So we've been hovering, you know, close to 10,000 homes in the first 2 weeks of every month. So that's only 2 weeks. So we've been putting quite a bit of homes under contract. Why I say we're starting to see a little bit of a shift here is because for October, the first 2 weeks, we've only hit 8,000 homes under contract. So I'm starting to see demand fall just a little bit. It's about 11% from last year. And let's see, what is that from this month? So we have from last month, where are we at? B10. Oops, B15. Got to get the right ones in there. So we're seeing from last month about a 17% drop in buyer demand. So it's very interesting to see that going in. Now it is, we do have an election coming up and we do have election season. So we do tend to see demand fall, you know, around 10 to 15%. So it could be normal. It could be that prices are getting too high and buyers are starting to get a little bit of cold feet. I don't know what's driving this reduction, if it's regular or not, because this whole year has been completely abnormal. So it's super interesting to see this little bit of shift. Closings are up because we had so many homes go under contract last month. So yes, closings are up year over year. We are up 28% in closings as compared to last year. Now, as compared to last month, we are up as well, a few percentage points. So that's interesting to look at as well. New listings. So we keep saying there's an inventory shortage, and while that's true, we do have a lack of inventory. It's usually because demand is so high. And so what we're seeing more people actually putting their homes on the market right now, overall. So last year, October, so the first 2 weeks of October last year, we had 5,022 homes come on the market. This October, the first 2 weeks, we had 5,600. So that's up 12% as well. So more people are putting their homes on the market, and it looks like demand has fallen slightly. The other thing to talk about demand is that new mortgage applications are also down slightly. Now it's still very high. So our new new mortgage applications is still high comparatively year over year, but we are seeing a, like a 1% drop, slightly below 1%. And that is data from the Mortgage Bankers Association. So the other thing that I look at when I'm looking at how is the market and are we going to continue to see this trend is that we have a rate of homes that fall out of contract. So these are homes that people put an offer on, the offer gets accepted, they go through, their inspection period, and for whatever reason, we're seeing them kind of fall out of contract. And so I took an informal poll with my real estate colleagues, and I'm seeing that a lot of buyers are getting cold feet. So they're going under contract and then they're kind of backing out. And so that number usually sits between 2 and 4% in a normal market. Right now, our fall through rate is 11%. And so with the amount of contracts that we have going through, I feel like that's pretty high. And so, and again, I don't know if buyers are getting cold feet, that seems to be the number one reason. The other reason is repairs. So sellers may be starting to think like, well, I can sell my house for whatever I want and I don't have to fix anything. And it seems like the buyers might be starting to push back on that a little bit, saying like, hey, we're paying full price. Like we want things fixed. So we're starting to see, some things changing, and it's very interesting to see it all. So let's see what else I have. I think I have more numbers up here. So I also look at the types of buyers. So we have cash buyers, we have conventional finance buyers, we have FHA finance buyers, we have VA buyers, and that kind of thing. So when I ran the numbers earlier, and it looks like most of our buyers, they're financed. And so there's some kind of a conventional finance. So conventional has 5% down, they have 10% down, and they have 50, I think they have 50 or 20% down. So so most of the buyers in our market right now are conventional and they are financing. And then the next highest would be our cash buyers, and then our FHA and VA buyers. So we did see a little bit of a decrease in our VA and our military buyers, and our cash buyers are up a little bit. So, and last month when I ran this, our cash buyers were actually kind of down. So it's interesting to see the cash buyers come back this month. Our average price in our market, so our average list price, not necessarily our sale price because that changes, but what people are going onto the market. So our median price, and what median means is that that's the exact halfway point. So there's just as many homes above it as there are below it. And our median price list price is $484,000. And so if we have 8,000 homes on the market, there are 4,000 homes that are more expensive than that, and there are 4,000 homes that are cheaper. And so that's our average list price, and then, or median. And then that is actually up 13% from last year. Last year, our median price was $428,000. So again, we're up, our prices are up, buyer demand is still up. But again, I'm starting to see it kind of fall slightly. So watching that demand is going to be interesting going into, again, the election season. We might start to see demand fall a little bit. But what usually happens in an election season with the demand dropping is that people will wait, and they'll wait to see what happens with interest rates and all that kind of stuff. And then they usually come back to the market in January. So it's not that people are dropping out, it's just that they're waiting, and it just is a delayed sale. So if we start to see our numbers fall, November and December, we will probably see them pick back up in January. So that's kind of what I'm seeing in a nutshell. I know that there are some of you guys on right now. If you guys have any questions, you know, about the market, if you're thinking about buying or selling and you have questions, go ahead and leave them. I am watching the feed here, so I'd be happy to answer any questions. The other thing I wanted to show you guys was a couple of tools that I use to watch the market. There are two tools that I use that I pay for that I have free for my clients. I can give this to you guys for free. So if you guys are interested in tracking the market with me, I have some great tools for you guys to use. So let me share my screen with you so that you guys can see what these tools are that I am talking about. So we have, so these are my Altos markets reports. So Altos is a company, they're a data company, and they aggregate data, and I have these really great reports. And so I wanted to show you, if anybody wants to throw out a zip code, you can. I'm going to do, let's see, let's just put in 85024 in Phoenix. So we'll just kind of throw that one out there. It's up kind of by Desert Ridge. It's got Paradise Valley School District, and you know, it's kind of like interesting neighborhoods up there off of like the 101 and Cave Creek Road. So that's this zip code here. And so as you can see, this is what the data reports look like. And so this is Phoenix 85024. And it gives you just a little bit of summary. And it says this week, the median price for the zip code is 429,000. And the market index is hovering around 73. And the market index is this right here. You see this little like dashboard here. And really, when you're looking at this index, the thing to know is this line here is that anything over 30 means that we're in a seller's market, and anything under 30 is that we're in a buyer's market. So like I said earlier, demand is still very, very high, even though we're starting to see it tick down just a little bit. But this particular zip code is at a 73 on this index, which is extremely high. So demand is high and inventory is kind of low for the demand that is there. So if you want a report for your zip code, what I'm going to do is leave the links. Let's see if I can leave these links here. This is that's the event. I'm going to go straight to the page because I had to go to the live. So I'm going to leave a link here in the event. Actually, why don't I talk about the second tool? So that's the first tool. So these are the Altos research reports. And again, this is a tool that I pay for. So if you're interested in following the market and following the action index for your zip code, then I'm going to leave that link for you guys to sign up so that you can watch your market. The other tool that I pay for my clients is the HomeBot tool. And it's pretty amazing. And I just want to show you the value that is in it. It tracks basically your home value, your home equity. You know, if you're thinking about renting it out on Airbnb, there is information about like how much revenue you can make, and you know, basically like really great information. So let's see. So I'll show you what mine looks like. I just bought a rental property, and so if you're thinking of investing, this is a great way to track your equity as well. So let me find it here. And I can show you what this report looks like. Okay, so there's so many tools with this HomeBot. So that first tool is all about kind of tracking the market and seeing, you know, are we in a buyer's market? Are we in a seller's market? And there was more data there that I didn't even go over. And the second tool is really just watching your current home. So if you are a homeowner, this is a super awesome tool. And so it kind of tells you the estimated value of your home is 290,000, right? And every time I come in and check the market, because sometimes it goes a little wonky and it makes it valued more. So if I see that there is a big jump, I'll go in and check the MLS and I'll actually check the market to see where it's at. And so that's why you see my little face here, because I went in twice and I said, okay, it's worth this much. And then they said it was worth a little bit more. And then I brought it back down to reality, because sometimes that happens with these automated ones. So right now this house is worth about 290,000. But if I come down here, then it tells me here, like 85027 is high in demand, but cooling down a bit, right? Exactly what I just told you is happening with the market. And what that means is the net worth of your home to you is 23,000. So that means I have $23,000 in equity in this house right now. And then it goes more. If you scroll down, it gives you options on, hey, how much can you save in interest? If you pay $150 more a month, you could save up to $25,000 in interest. So it kind of gives you that. But what I really like about it is that it also gives you, well, probably not, because I just bought it, so it's not giving me refi rates. I kind of want to show you one with refi rates. Let's see. Oh, I know. There is, let's look at this one here. So again, it shows you the value of your home, right? It shows you what your equity, you know, how much equity you have in your home. And then if you come down here, you know, it shows you how much interest that you've paid so far. So the other house, since I just bought it, doesn't show me any of this because I don't have any history in there. But this one, it shows, you know, how much interest you paid, how much, you know, how much you're going to pay, what your current loan is, and all of that information. And you'll be able to track, you know, is it better for me to refi right now, right? So you could do, if you did a 25-year fixed, you know, you could save $10,000 in interest, and, you know, you could have long-term savings. So it's pretty interesting to see all of that, and it gives you all of your options on refinancing. I feel like this rate is a little bit high, 3.71. I feel like there's better rates out there. And then if you wanted to rent on Airbnb, you could rent your home on Airbnb, and, you know, here's what your neighborhood is going for during, obviously in Phoenix, like our Airbnb rates are better in the spring than it is in the winter. I mean, in the summer, sorry. And then stuff like that. So this is just another tool. And so you'll be able to see, like, you'll have an average monthly revenue. You can make $12,000 a year renting your house out on Airbnb. You know, is it a good deal for you to do that? So there's all these little tools that I have as well. So I think that's pretty interesting. I don't know, does anybody have any other questions on the market? I kind of went over things a little bit quickly, but I just wanted to make sure that I was able to get on and let you guys know what was going on in the market. So that is what I have for you guys. So again, just to quick sum it up, the market is still moving very, very quickly. We still have pretty high demand, but again, we're seeing a slight drop off, and it could be caused by the election coming up. It could be caused by, you know, the buyers finally pushing back because they're paying top dollar and sellers aren't willing to repair things. So there's a couple of things that could be happening there. The average price, listing price we're seeing is up it's almost to 500,000 as like the average, the median, I want to say. So again, the median would be, you know, if there's 8,000 homes on the market, there's 4,000 more expensive, and there's 4,000 cheaper homes. So any questions? I'm not seeing any on here. So again, I will leave the links. I will leave the resources in the Facebook Live in the chat here. As a comment, I'll go ahead and post it. And so if you want to keep an eye on it, you can definitely track yours. If you want to sign up and you don't see the link, you can message the page Live Play Phoenix directly, and I can help get you on the report so you can track the market, or you can track, if you're a homeowner, you can track your home value and your equity and your wealth building in your house as well. So thanks for joining me today. We'll do another one, after November 1st. So we'll do the beginning of November, and we'll kind of see what's happening if we are still seeing this trend kind of decrease a little bit for buyer demand. So thank you guys so much, and we will talk to you in a couple weeks.